It's good to be here talking to you all. Thanks for coming in to listen. Yes, we started looking for uranium. Now we've discovered Australia's largest graphite deposit. So there's a couple of highlights there. Like I said, we've got Australia's largest deposit. We released a mineral resource about 5 weeks ago. It's a fairly large one. We'd like to say it's a Tier 1 asset in a Tier 1 location. We're about 2 hours drive south of Darwin, so it's a fantastic place to do work. Just some investment highlights there. Again, it's 100% owned by Kingsland, the graphite deposit. Our preliminary metallurgical test work indicates we've got favourable flake size for our downstream processing into our battery anode material, although that test work is still ongoing. The graphite market now is moving into deficit, or forecast to move into deficit very soon, mainly based on the demand for electric vehicles and the graphite that's used in those batteries that power them. Also of significance is China late last year introduced export controls for graphite. They're the world's current largest producer of graphite, raw flake graphite and processed products. So again, that sort of turned the world on to maybe diversifying away from that single market. And just a little corporate snapshot there as well. We've got a market cap of $15 million, cash of nearly $2 million, and we've got some strong news flow coming up in the next few months with our metallurgical test results as well. Okay, we've been listed for nearly 2 years. We listed in June 2022. The initial target was a uranium deposit in the NT. We drilled that out and we got a resource there of about 5.2 million pounds of uranium. In the process of doing that, we discovered a graphite deposit, and we've since drilled that out as well. And in March, we released a mineral resource of 195 million tonnes at 7.3% TGC, which is total contained or total graphitic content or graphitic carbon. And we've also discovered a significant soil anomaly for lithium down at Lake Johnson. So in less than 2 years, we've been fairly successful with our exploration programs there, and we've got 3 nice projects there of future-facing minerals. So just to go back to the graphite there, which is our focus, our main focus, the resource there we released a few weeks ago. Like I said before, it's about 195 million tonnes at 7.3% carbon, which makes it Australia's largest graphite deposit. That's just another way of saying that there. We're obviously the big green bubble on the right-hand side there. These are all of our graphite peers within Australia. So we like to obviously to advertise the fact that we've got a nice big deposit very close to the port of Darwin. Now just a quick discussion on the graphite market. As I mentioned before, China is currently the world's largest producer of flake graphite, and they're also the world's largest producer of refined graphite products. You can see from these numbers from about a year ago, they produce about 99% of spherical graphite, which is a precursor to go into your electric vehicle battery. So the world sort of buys, every single EV car in the world right now essentially has got graphite which is processed in China, if not produced in China. Now, China late last year introduced export controls, and that reminded the world that maybe it is time to diversify away from a single supplier. As I said, most of the graphite in the world is mined in China, and the rest of it comes from West Africa mostly. So there's not a lot of sources of supply, and I think you'll find that places like Australia and say our Leyland deposit now are well placed to take advantage of this diversification going forward into the future. Now, what's it used for? It's been used traditionally for industrial usage, steel production, heat retardants and things like that. But there's also a lot of graphite in car batteries. And that graph there just shows the increase in global EV sales in the last few years. So it's a very strong market at the moment. It's growing. China's driven a lot of that growth, but other countries like Australia and the US and Europe are catching up. I think as you find there are longer ranges, more charging stations and things like that, that the uptake will improve on the EVs. That's the same graph there, just with Australia. You can see there's last year there were 98,000 EVs sold. That's plug-in hybrids and pure electric vehicles. The numbers are going up for the early part of this year. You'll see in March this year, 20% of passenger vehicles sold in Australia were electric, and 10% of total vehicles sold in March this year were electric vehicles. So the market's increasing, and obviously that gets linked into the graphite demand going forward. That little picture there of what's in a car battery, schematic there. So there's a lot of graphite in every battery, around 50 to 70 kilograms. So it's by far the biggest single component in a car battery. There's a lot more graphite as compared to things like lithium and cobalt and the like. So it's a market which is going to grow with EV usage going forward. So there will always be that demand there for graphite. And you combine that with diversifying away from China, it obviously puts our project in a good position. So where are we? Excellent location. We're about 2 hours drive south of Darwin, in the Pine Creek mining area. Pine Creek's traditionally a gold mining area, so there's been a long history of gold mining there, and mining in general, so it's a very supportive community there for mining. We're about 20 kilometres out of Pine Creek there. It's right adjacent to the main infrastructure corridor leading into Darwin, so we're very close to high voltage power lines, railway lines, sealed highways, gas pipelines and things like that. So it's a fantastic location. It's on a pastoral lease as well, so it's not freehold land, so that makes any sort of further development a little bit easier and a little bit free of any red tape there. The project itself, and one of the beauties of this project is its simple geology. It's a contact zone where you've had carbonaceous shales have been intruded by granites, and the heat from the granite has cooked up the carbon into graphite. So you've got a zone there, sort of adjacent to the granite contact there, that blue zone, which is all the graphitic schist. So we've got about 20 kilometres of that within our tenement there, and our drilling there, you can see the black dotted box there is the mineral resource area, so we've only really targeted about a quarter of what we've got there so far. And that's a summary of our drilling from last year. In the NT, you can't drill between about, say, December to maybe March, April with the wet season there, so we focus this in the winter months. We try and target the football season for our drilling season. So you can see there a common characteristic of our drilling there is wide, good grade intersections. It's a fantastic deposit geologically wise. It's very simple, and the section here you can see in the middle of that plan view there, that section there, you can see there it's subvertical, it's 100 metres thick, well, up to 150 metres wide in some areas there, and outcropping on the surface. So for any future development scenario, what is very positive with this is we're going to have very, very low mining costs, a very low strip ratio. And you can see on that slide there, that thicker bar at the top there, that's averaging 12.2%. So you've got some good grades on surface there, so we can go through there and pick out the high-grade parts and the parts with the more favourable sort of processing characteristics as well. So it's a great project there, and I would suggest that when we start doing some more meaningful mining studies, that we will have very, very low mining costs on this, and the initial few years will have a strip ratio of down near zero, given the width of the ore body and its strike length. So there's the resource we've drilled out so far, the 195 million tonnes at 7.3 down the bottom there. You can see that thick dashed line is all of the untested potential. So not that we need a resource that big to go through in the mining studies, but it highlights the flexibility we have in targeting high-grade areas, areas with larger flake size, or areas with better flake characteristics for the flotation or downstream processing into battery anode material. So it's a nice project to have in regards to that mining and processing flexibility. Now, we've done some initial float test work. We released a few figures a few weeks ago with the mineral resource estimate. We're doing the initial flotation sort of optimisation work. You can see there these initial results there. We've got quite good recoveries, above 90%, which is very good. The grades were around 90%. Since then, we've had grades higher than that. The target is a concentrate grade of around 94-95%. And obviously recovery as high as you can get. We're sort of close to optimising, grind size, grind time, reagent dosages and viscosities and things like that in the flotation to maximise that, or to optimise it. So we're very confident we'll get a concentrate grade of around that 95% mark, and once we achieve that, we'll produce a batch of concentrate, maybe 15 to 20 kilograms, and we'll get that sent off to a lab, maybe in Europe at this stage, to get some further testing done to assess the viability to produce a battery anode material. So the process is, first of all, you get the flakes from the flotation there, you micronise them to a consistent size, and then you convert them into spherical graphite, which is your precursor into your batteries. And there's a further stage there as well, which is purifying it and also coating it as well. So it's a fairly complicated process going forward, and our first aim is to get a sellable concentrate grade, and then we'll assess the downstream processing viability of it. Now, we've got some other projects as well. Like I mentioned before, our lead project when we floated the company 2 years ago was uranium, and we drilled out an estimated resource of about 5.2 million pounds of uranium oxide there. That's been on the back burner since we shifted over to graphite about 14 months ago, but it's still there. There's still scope there to expand that project, make the resource bigger along strike. There's still some untested radiometric anomalies as well, which we'll test in the future. And the other project we've got too, and like I said before, the wet season limits some of your exploration in the Northern Territory. So we've got a lithium project down at Lake Johnson as well. And we picked that up for the very reason when it's raining up and around Darwin, we can come down to Western Australia and still do some work down here and get some news flow out. So we did some soil sampling late last year of our grounded tenement there, and we got some very significant anomalies there of plus 200 ppm lithium oxide, with an overall anomaly there of 100 ppm plus. Now, if you look at the black lines are at 5 kilometre intervals, so you've got an anomaly there which is 13 kilometres long by about 5 kilometres wide, open to the north and south. So it's a significant anomaly there, and we're looking forward to exploring that. We've got approvals already in place to clear and do drilling, and we'll start doing some drilling later on this quarter to see what comes out of that lithium. And it's also worth mentioning that there was some historic drilling there done by Western Areas for nickel about 15 or 20 years ago. And some of those holes did intersect pegmatites, but they weren't sampled for lithium. So there is pegmatites in the area, so it's got good potential there. So just a summary going forward there. We've defined the mineral resource. We've got Australia's largest deposit. We know it's simple geology, amenable to low-cost open pit mining, so that's a tick box there. Our initial metallurgy we've done to date indicates we can get a good grade concentrate at good recoveries, so we can get an economic product out of it. We've got to just optimise that flotation process and get our maximum recoveries and maximum grade, and then we'll start doing some more downstream processing later on this year overseas in Germany. And also, as I just showed you, that drilling at Lake Johnson, we'll start drilling later on this quarter, and I'm looking forward to updating the market with some results from that hopefully as well later on this year. So just a bit of a capital structure sort of snapshot there. We listed less than 2 years ago, so we've only got 60 million shares on issue, and also some listed options as well. Cash is 1.8 million. We aren't drilling at the moment, apart from that small air core program at Lake Johnson, so our cash flow is quite low at the moment. Our cash use is quite low at the moment. Market cap of $15 million based on the share price of 24 cents and an EV of only $13.2 million. So I think if you look at the projects there, not just Australia's largest graphite deposit, but also the uranium and also the potential of the lithium there, I think 13.2 is a fairly low valuation for the potential there. So there's a good investment sort of driver for that one there. Directors, it's fairly tightly owned stock. Directors own more than 20%. So again, that's a favourable metric there. So just to summarise what I've been talking about there, significant graphite deposit, the largest in Australia, fantastic location, Tier 1 location in a Tier 1 project, and we're looking forward to developing this in the coming years and supplying the world with a flake graphite product from the Northern Territory. Thank you very much.
You may have had sleepless nights wondering what is the future of grid batteries. No? You should. Let me talk about lithium batteries. Lithium batteries have a liquid electrolyte and a separator. They're organic, and that's why they can burn. So the lithium-ion battery industry is looking into solid-state battery. That is their ambition. Solid-state battery means you replace the liquid organic electrolyte with a ceramic piece. And why is that important? Because the ceramic doesn't burn. And burn is a very important safety consideration. If we talk about batteries that you want to use for solar, you want to put a battery in your basement that maybe burn? No. But also lithium-ion batteries are very sensitive to temperature. They're like a baby. They work well between 15 degrees Celsius and 25 degrees Celsius. So in very cold temperature, you constantly have to heat them. At 0 degrees, a lithium-ion battery only has 70% of its capacity and going down. So likewise, in high temperatures, in Australia, the surface temperature of a metal car is 70 degrees Celsius. If the battery only works well at 25, you have to cool it constantly. And that is a very important consideration for a battery park. If you own and operate a battery park, you don't want to operate aircon. You don't want to operate all these vans. They cost money. They take maintenance. It's a lot of work. And of course, it diminishes the lifetime of a battery because you constantly have to repair. But more so, lithium-ion batteries are depending on critical minerals, lithium, cobalt, and graphite. My colleague just now told you graphite is a very critical part. Why? Because it is the anode. And 90% of this material comes from China. China is in control. They're going to let you be successful? No, it's a very critical item to be supplied, and we need to be independent. The other product that we cannot forget is cobalt. Cobalt comes from the Congo. Are we an ethical supply chain consideration or not? So, can we depend on this? We need this material. And let's not forget copper. You are all investors. I'm sure you have invested into copper because an electric car needs 2.5 times copper than a normal car. And you need chargers, and you need this, and you need this. So copper is a very critical item, and there is not enough mines opening, so it will be critical. With these challenges, I give you the question, is there a battery that is absolutely safe, doesn't burn, works in a large temperature range, lives very long, doesn't need any maintenance, and doesn't need lithium, doesn't need cobalt, doesn't need manganese, doesn't need any of these? Let me introduce Altec's Serenity battery. This battery was developed by world-leading institute Fraunhofer in Germany over 8 years. It's 35 million expense, and it consists of sodium chloride, table salt, a little bit of nickel, and a solid-state ceramic cylinder. That is very straightforward, and it's been developed, and there are working prototypes. You can see here behind just now, that is the solid electrolyte. That is a ready product, working product, not an idea. So this is a 250 watt-hour battery cell, and it works in a cold temperature. It doesn't care. You can just have it there. It's independent. You can put it in Norway, or you can put it in the desert in California, or in Egypt, like shown here. It is independent. It doesn't need this. And that, of course, is a very important consideration when you build a battery park for your renewable energy. You don't want to have a maintenance team. You don't want to have the danger of fire. You don't want to have all these things. So these are important considerations for buying and operating a grid storage battery system. Now, how does this battery function? You've just seen this funny looking ceramic cylinder. Inside is a collector made out of nickel. And then there's active material. I just said active material, there's no lithium. It's just table salt, and what is shown here a little bit in blue is nickel powder. And that is sealed up, which is part of the IP and know-how of Fraunhofer, how to make this really work well. Then it's in a metal cylinder, totally enclosed, independent, maintenance-free. You can throw it into the fire, nothing can happen. So how does it work? When you charge the battery, the electrons go in. To balance the system, the sodium ions, sodium is at a higher temperature, sodium ions, the chloride goes to the nickel, and the sodium ions go through that ceramic part and form the anode. Wow, I don't have an anode. That's why I don't need graphite. That's why I don't need copper, because the anode is formed every single time. And what is the other good thing? When you charge it, and then the process is completely reversed. The sodium ions go back through the ceramic pipe and form table salt. There's nothing lost in between. Not like your handphone, the first year it's running like this, and yeah, all the other ones also go down. This battery, after 10 years, has the same capacity. Now, when you benchmark for battery grid systems, you use LFP batteries, redox flow, vanadium flows, sodium sulfur. Altec Serenity sodium chloride solid-state battery is right there. We can compete with all, but we have advantages. You already know it doesn't burn. But because I have no maintenance, this battery is expected to have the lowest total cost of operation. That's called levelized cost of storage. We will be half. Now, at performance, there's two things in performance. On the lower side is how much energy can I store? On the left side is how fast can I discharge it? The red graph is lithium-ion batteries. So the very fast discharge for a Porsche or whatever, you can see there's a lot of cobalt, special minerals inside. It's on the left. And for the grid storage, there's lithium iron phosphate batteries, which is on the right. We're right in the middle. Now, why is this market so important? What is the grid storage market? The grid storage market is for the energy transition. You want to do a lot of solar and wind, but that comes with challenges. Why? The sun shines at lunchtime and you want to use that power in the evening. There's a gap. And the problem is so big that energy is thrown away. In Germany, it was last year 3.3 billion. The fancy name for that is redispatch. And it is everywhere. Redispatch means throwing away. You produce solar and renewable energy, but you can't store it, you can't put it in grid, nobody uses it, you throw it away. So building more renewable energy, is it going to help? Is it going to make it greener? No, you just throw more away. So the only solution is grid storage batteries. Tesla last quarter made more money with storage batteries than with their cars. Anyway, the problem is going to increase. If you have EV cars, AI, and all the other things, the grid can't take it. So you need batteries. You need batteries to store and get the gap and get it done. And the other very important thing for you as an investor and us is that you have to come and visit me in Germany. The battery is ready. You can plug it in. Fraunhofer built a pilot plant for 25 million euro. In this pilot plant for the last year and a half, we are only building directly what will be our product in the automated things. So very different. Not like you read in the newspaper, new whatever, fantastic game changer. That's 10, 15 years away. It doesn't happen. This battery is here today, measured, tested, everything. Every product that we want to make. So what was the charge of Altec and us? We put a battery that is being produced in 3 days into an automation of 45 seconds. So there is a scale-up risk, which is relatively small, and an automation risk. But what is Germany good for? Building these things. That's why Altec Syringy battery will be a battery made in Germany on the highest possible level. The machinery in there is no difference from the machinery at Volkswagen, BMW, Northvolt, whatever. So that's why we're building this plant in Germany. But it's more reason than that, than just technically. We are building the plant in the eastern part of Germany, which is slightly structurally underdeveloped. We bought a 14-hectare piece of land, which is fully owned, unencumbered, ready to start. We have all permits. We are ready to go. You can see a depiction of the real plant. And also the product we have issued 4 weeks ago, the DFS. For the DFS, you need the product design to be finished. It's finished. You see there, this is the battery pack consisting of 5 modules. Each module has 48 brilliant. This is 60 kilowatt. And 18 of these battery packs we put in a container. A normal 20-foot high sea freight container. Can you imagine what that means? Lithium-ion batteries are dangerous goods. You can't ship them. Our battery you can pick up at the shop, fully charged if you wish, put it on the truck, go to your site and plug it in. Wonderful, but I come more to that. Let me talk a little bit about the DFS. I want you to download the DFS, so I'm just going to give you a taste. With the first line of 120 megawatt hour, is the first line, we want to spend about 180 million euro, but we are generating an EBITDA of 47%. We have an EBITDA cash flow of 51 million euro per year on a revenue of 109 million. Pretty good. The project IRR is 19%. That may not be super sexy for a new thing, but you can imagine battery production is scale intensive. Scale sensitive. Can you imagine what this would look like if we start building the gigafactory? Anyway, this is the next step. So we can build this everywhere. And we have everything ready. We have every supplier. We have 52 specialized suppliers to build the plant. We have all the raw material identified, all the items, and we are building the actual finished prototype that will go into the market. So you are the client, you want to buy the batteries for me, you want to buy forward, you can plug this battery in, all the numbers are there. And on top of it, my joint venture partner is the world's largest, best known battery institute in the world. In the world. CATL, Panasonic, Samsung, everybody works with them now or ever. They have chosen us, and we make a German product out of it. And this is the battery you can see. It's protected by patents, yes, but more so by technology. That ceramic cylinder to make is not easy. You buy our battery, break it apart, can the Chinese rebuild it? No. You don't know the additives in between, you don't know the times. Now you've just seen a little bit of weld. That laser weld is very, very, very difficult because you have different materials. It's just two of the great IPs. So we have a big advantage. And again, I cannot point out more. The battery is ready. So we're not talking about an idea, something, everything has been done. We're now, therefore, going into the financing phase. We have to wait a little bit because the German government takes a little bit of time and we cannot start building, so we hope that we get all the answers by end of the year, but there is substantial support to be expected. Now let me repeat. We have a battery that doesn't burn. You buy a battery, you buy a battery, maybe the garage go on fire or not? Right. The battery can be put anywhere, public places, in the city, next. And I don't need an access way for the fire department. I don't need a firewall. I don't know if you've seen a battery park. It's very intensive. You can just put it next to your factory. You can put it in the city. You can put it anywhere. I don't need materials. I can make it everywhere. I don't need large supply chains. So, ladies and gentlemen, I thank you very much. There's only so much I can say. But I invite you to be part of this journey, of our journey where we want to become world leaders. And please visit Altec on your next European vacation. You will not regret. Thank you.
Thanks, Christina. Good morning, everyone. It's good to be here again. Last year I presented and I'd just joined Flynn Gold as Managing Director, and we've had a pretty interesting 12 months. I'll just grab the pointer here so that I know what I'm doing. We'll go through the disclaimer. You can read that at your leisure. So what's important about Flynn Gold at the moment? First of all, we just completed a rights issue yesterday. We raised $2.5 million. Combined with the money we already had in the bank, we've now got $3.5 million in the bank, which for a company of our market cap means we're very well funded and allows us to focus on what we're doing next. And our activities have already started back in Tasmania, where we're focused on chasing high-grade Victorian-style gold mineralisation. So as Christina mentioned, Southern Cross Gold has had a very good run of late with their discoveries. They've drilled about 10 times the number of holes and 10 times the number of metres into their Sunday Creek prospect, as we've done at our Trafalgar prospect, where we've had the most success. And so hopefully we're on a pathway where we're following in the footsteps of Southern Cross Gold with their exploration activities. So our aim over the next 12 months is to really advance these projects. As I said, we've only got a handful of drill holes in place, and we want to prove up some significant gold mineralisation on our prospects. And just also looking at the strike rate that Southern Cross Gold on their drilling, they've got about 30 odd hits, which have over sort of 50 to 100 grams or over 100 grams metre of gold from their 170 drill holes. From our 15 drill holes we've got at Trafalgar to date, 5 of those have intersected gold over 100 grams per tonne. And some of those are 100 grams a metre results as well. And that's from very shallow depths of about 20 metres, down to about 250 metres in the deepest intersection. So we're starting to get some continuity from the drilling, which last year when I was talking here, we only had a few hits. So as I said, we're drilling back at Golden Ridge right now. First hole has been completed yesterday, and we're targeting some of these high-grade intervals, which I'll present to you. And of course, that means there's assay results not too far around the corner. This is a corporate snapshot which shows you the capital structure and the board. Bottom bottom right-hand corner, you can see John Ford is on the board. John's Chief Investment Officer for Lao Resources Fund, and Lao are sitting at 4.4% holding in Flynn Gold. Now, Lao came in at the seed level, they came in at the IPO level, and they've participated in every capital raising since, including the rights issue we completed this week. So they are a very big supporter of us. And why are they a big supporter of us? They're a big supporter because they believe that northeast Tasmania has got the right geological setting for high-grade gold discoveries, just like the Victorian goldfields. Also on the board, we've got Sam Garrett, who's a geologist with a number of discoveries under his belt, and Clive Duncan, our chairman. He's representing, amongst other things, our major shareholder, a fellow named Colin Burke, who's very supportive and has also heavily supported the company over the last couple of capital raisings. You can see there at a share price at 2.6 cents, which we're trading at today, our enterprise value is a very low $3-point-something million. So why northeast Tasmania? Well, quite often you hear people talking about we're going to go and explore for Victorian gold in Victoria undercover in the Murray River Basin. What they should be doing is, instead of looking north, they should be looking south towards Tasmania, and that's what we're doing because we don't have the Murray River Basin covering the northeast part of Tasmania, but the geological setting is very similar, orogenic style gold in most cases. And there is a history of high-grade gold being found in Tasmania. If you look at Beaconsfield, for example, almost 2 million ounces have been mined there, and the first phase of mining there up until World War I had gold at 26 grams per tonne being mined out of that deposit. Closer to our ground, Mathina closed about 100 years ago. That pulled out 250,000 ounces at also 26 grams per tonne. And the only operating gold mine in Tasmania right now is at the Henty Gold Mine over on the west coast. For those who want to do their research, that mine opened in 1996. It had about 500,000 tonnes in the ore reserve at a grade of, you guessed it, 26. That mine is still running today and they've pulled out 1.5 million ounces of gold and still going strong. So Tasmanian gold has high grade as an attribute. So also people talk to me about Tasmania as a mining jurisdiction, and it really is a tier 1 jurisdiction. I come from Western Australia where I thought we knew everything there was to do about mining gold, but certainly Tasmania has been a refreshing surprise to me, and it certainly is got good infrastructure, good workforce and a supportive regulatory regime. So there's 2 areas we've been working on, and I'll talk about Golden Ridge in particular in the time I've got. It's what we believe is a large intrusive-related gold system, whereas Warrantina, it's part of a structure which runs from Mangana in the south, you can see there, up to Lyndhurst in the north, and there's about 80 to 100 kilometres of gold workings in that area. So that's very much an orogenic style, Victorian style gold prospect. So this photo at the bottom here shows you the environment we're dealing in. So we're drilling at Golden Ridge. Where we're drilling is forestry country, state controlled. There's plantations. You can see in the foreground in that photo where it's been recently logged, and in the middle ground in the depression is plantation timber. And Golden Ridge is in the background. You can see the arrows pointing to Trafalgar and Brilliant, where we've done most of our drilling to date. We've got a drill rig at Trafalgar drilling at the moment, and the environment at Trafalgar is very similar. That photo on the right-hand side shows drilling where we're at the top of the ridge, but we're also been drilling down the bottom where we are now. So not only is it state forest, we can get permits to get in there very quickly. We don't have to deal with a whole lot of red tape before we go and do some drilling. We've got direct relationships with all the mines department people, And our staff live in the community, so they're members of the community, and they have strong support from their families, friends, and everyone else who is supplying us with their services. And the other thing about Tasmania, which is really quite good, when you talk about mining operations these days, is ESG, green credentials, or what have you. Well, most of the energy in Tasmania is generated through their hydropower schemes, so you've got reliable, renewable energy in that state. So this is a map of Golden Ridge. You can see it's the pink area is a granite intrusive, which is pushed up. It's cooked up the sedimentary rocks surrounding it, and it's along that contact, which is now 9 kilometres long, that we've identified. We've got old workings and we've got soil anomalies showing up. So you can see in the middle there where the Brilliant prospect is. We've done some drilling there and confirmed gold mineralisation from historical drilling as well. We've stepped across to Trafalgar and done 14 holes and just completed our 15th one yesterday. And we've also done a dozen RC drill holes along the range, and we've hit some mineralisation in all of those a dozen RC drill holes. And we've also, over the last few months over summer, had the team out there doing more soil sampling, extending our soil sampling to the north on the east and west sides. And we've identified new gold anomalies at a place called Grenadier on the west, Big Penny on the east, and also in the granites itself at a place called Duke. So the more we work in this area, the more we're finding, and we're certainly not just focusing on the Trafalgar area. We are looking at extending our regional exploration program to see if we can find these other targets to grow this system. So this is an overview slide. If you imagine you're looking from the northeast to the southwest, you can see on the right-hand side is that Grenadier. The black line running around is the contact between the granites and the sediments, and the coloured layer over the top is the soil sampling. So the red areas are the high-grade gold hotspots, and you can see they match up with the Brilliant and also at Trafalgar. And we're also, between those two, there's an area called the Link Zone, and that's an area which is really quite interesting. There's gold in soil anomalies there. There's workings with gold that's been recorded there, and we've recently just identified the old original Golden Ridge at it, and we've had a team in there sampling there, and I'll show you something about that a little bit later. So this is a prospective horizon. You can see the drilling we did at some of those RC drill holes, like at Link Zone. There's LZRC 001, had some 2s and 3 grams in it. Number 4 had 33 metres at half a gram. Now these are RC holes we drilled just to test if there was mineralisation there. And down at Trafalgar, where we've got 5 holes out of 15 over 100 grams, we've got intervals like 4 metres at 23.7, including half a metre at 169 grams per tonne gold at a depth of about 23 metres. And I'll just show you that area now, because we've done a lot of modelling over the last few months. You can see there's 3 veins running sort of basically east-west across that map, and they're the main veins which we've mapped. There's the Trafalgar Main, the Magazine Vein, and Trafalgar South. And where we've hit these high-grade zones, that's where these veins are. So, as I said, we've got 5 intersections out of 15 holes drilled. The width of the mineralisation is over 400 metres along strike. It's open to the east, open to the west. And we've got 2 holes you can see there, phase 3 drilling. Hole 16 has just been completed down to a depth of 356 metres. We've been testing all those 3 veins with that hole. And the rig will move over to the east to test beneath that high-grade hit of half a metre at 169 in hole 17. So over the next few weeks, you'll start to see results from those sampling, from that drilling being reported. We've also done some important met test work and identified that this gold is free. It's not refractory, as far as we can see from this test work, and we've done we've had recoveries of almost 95% gold through that leaching test work. So this map shows the 2 sections, or these 2 sections show where we're drilling at the moment. So the left right-hand one shows hole 17, which we're drilling at the moment. Hole 16 is on the left, and you can see hole 16 was drilled right under the old shaft, between where the old shaft bottoms out and the 2 hits which were in the main vein. There's 0.4 at 150 and another 0.4 at 138. So we're testing that high-grade shoot in that drilling, and also these other veins that are running off it. And similarly down to the existing hole 17, off to the west, to the east, we're testing that as we speak. So look forward to those results being reported. Additional drilling will be decided on once we've got the results of these 2 holes. Just to give you the link zone, as I said, these photos here show the old workings. They were mined in the 1800s, we're not sure when, but probably about 1880. Very, very good condition. The adit's dry. It's about 125 metres long, so they obviously were chasing something. And they intersected, or down about 100 metres in, they've done a right-hand turn and put in a northeast orientated drive on some mineralisation that they've obviously picked up, which matches up with what's on the surface about 60 metres above. So we've got some very good geological information from getting in there and having a look at this. There'll be more mapping done on that as we go forward. We've collected a few samples and we look forward to seeing what the results of those come out from in the coming days. I'll skip through Warrantina. So just to wrap up, over the next few weeks our focus will certainly be on drilling at Trafalgar and Golden Ridge generally. We're looking forward to having some successful results there. We think that we're on the path to establishing some significant gold mineralisation in this system. An intrusive-related gold system like this can carry multiple million ounces, like a lot of them do around the world. So it's an excellent location for us to be exploring. We've got good support from the community, and combined with a good management team, I think at our current share price, it wouldn't be hard to suggest that maybe a 10-bagger is not too far away. Thank you for your time today.
Thank you. Yeah, a little bit of a change of pace. We're actually in production rather than a lot of the other companies you're going to be hearing from at this conference that are still going through that exploration through funding sort of phases. So Hillgrove Resources started the Kanmantoo 2 copper mine. We started producing copper only earlier this year, and fantastic time to be producing copper. We have now record copper prices in Australian dollar terms, and that's just translating for us into a real improvement to our already healthy margins. When we started this mine, copper price was about $12,500 per tonne in Australian dollar terms. Last week it hit about $15,500, so up $3,000 per tonne, and that just adds around $40 million of additional revenue to our already healthy economics. But that's way too simplistic. The reality is that the increase in copper price also enables us to really have a look at how the mine is being operated. So we are currently have an opportunity to be able to do things like reduce head grade and take what was previously lower grade material, sub-economic, and bring that into the existing mine plan. And we're blessed to have a processing plant that's only 40% utilised, so any additional material that we can bring to the front of that plant, we can convert to copper and into cash and feed into that higher copper price environment. So that's providing obviously a massive value opportunity that we're currently looking into. But despite all this, and this is obviously some of the investment opportunity, I guess, for the astute investor, the copper price rising on such a steep trajectory, our share prices remain relatively flat. And I think in part that's because the market's still factoring in a level of delivery risk as we get into operations and build up to our steady state. So today what I'm going to be focusing on is how we've gone from, I guess, a final investment decision and within 7 months hit first copper production, delivering on every milestone along the way. And now we're 10 months in and we're fast approaching 1 million tonnes per annum already as an underground mining rate on our way to producing our steady state rate of 1.4 million tonnes per annum. So obviously we have a great growth platform, and I'm fairly sure that once the market understands that we're delivering on those opportunities and delivering on that mine plan, that we'll see the re-rate take into account the recent surge in copper prices. With regards to growth, we are also drilling a large exploration target. We have 60 to 100 million tonne exploration target immediately on and around the mining lease. So just for context, current mine plan is only 4 million tonnes. So 60 to 100 million tonne exploration target, if only partially mineralised, would translate into a material value opportunity for the company. So for those that may not be familiar with the Kanmantoo site, it's located just out of Adelaide, in 55 kilometres out of Adelaide. It was mined as a series of open pits from 2010 to 2020. During that time, we produced around 140,000 tonnes of copper, over 55,000 ounces of gold. Over the last few years, we've actually been drilling below the base of those open pits to determine the viability of an underground. Earlier last year, we released a feasibility study, just demonstrated we had a 4-year mine life, plenty of exploration upside, but it could throw off plenty of cash within those first 4 years. And on the back of that, we funded, got into production in about June last year, first copper by February this year, and we've just been building up ever since. Once we got underground, we saw the rock conditions really quite competent. That just enabled us to turn those development phases over really quite quickly and establish the mine and get up those planned production rates. So I'll be talking a little bit on the following slides about how we've gone from that explorer to producer stage and how we're mitigating all that sort of delivery risk. But just prior to doing so, just a quick corporate snapshot. We're market cap around $160 million. At the end of last quarter, there was $7 million in the bank. There is no debt in this company whatsoever. So EV around $150, $155 million in that order. A couple other things just to bring your attention to, $259 million worth of carried forward tax losses. Obviously now that we're in production, free cash flow from operations protected by this as a tax shield. In addition to that, we have over $78 million in franking credits, and that just enables us to push out around $50 million worth of fully franked dividends at the appropriate time. And as I spoke about in the opening slide, we've seen the copper price, which is here in the darker line, really surge over the last couple of months, but our share price, shown here in orange, has been pretty flat, and I think this really represents a huge opportunity from an investment point of view. We're operating in South Australia, excellent government that really understands the value that the resources industry brings to the broader state economy, actively facilitates investment. This has been recognised on a number of occasions, most recently with the Fraser Institute report, again seeing South Australia in the top 10 for mining investment attractiveness. We take our product only just down the road, 70 kilometres. We sell it at Port Adelaide. It's actually at the port that we transfer ownership, receive 95% of our proceeds. Has that quick turnover of payments. It enables us to keep our working capital requirements down quite low. And of course, only 55 km from Adelaide in the beautiful Adelaide Hills wine region, attracting and retaining high quality workforce has not been a problem and a real comparative advantage for the business. Excellent relationship with the local communities in Kanmantoo and Callington. This is born out of 20 years of delivering on our environmental rehabilitation and operational commitments. We're regularly held up in government as best in industry with regards to our community engagement, and we roll all these ESG related activities into an annual sustainability report that's all aligned with the GRI framework. We map that to the UN Sustainable Development Goals and the ICMM. Really quite proud of this work and would encourage anyone to come and check it out. As you saw in the opening sort of video, we are underground, mill is commissioned, we are producing copper. As we get into the underground, just like with all startup underground operations, very much the development rate is what limits the total production rates. We've been very, very focused on getting that development out in front of the mine to open up the mining operation. And what you can see here is where the mine is currently to date. Now, the graph on the right-hand side, that's just showing our stoping tonnes. So basically, we started stoping at the start of this year. We had one stope online. That's the orange bar that's shown in that graph. Come into March, we had a second stope come online. That's the green one. It was only towards the end of March that we managed to get the development out in front of the mine enough that we could turn on more than one stope concurrently. And you can see the immediate impact that has in April with the production rate basically doubling over and above all of the preceding periods that we had prior to that. So we continue to really focus on opening up the mine by expanding the development, really to break the back of this operation and see that production profile lift. So to date, we have already developed out around 400,000 tonnes of stopes in front of us. So this is equivalent to 3 or 4 months of milling already in place. We've just got to pull it out of the ground and convert it into copper, into cash. In fact, over the next 6 months, we've already got more than 50% of those stopes already developed, which is indicated here on the blue line. And this does two things. It enables us to bring on additional production working areas, additional headings, increasing that production profile, but also materially de-risks our delivery over the next sort of 6 months or so, and we continue to expand out over and above this into the future. Next port of call is we head off into Nugent. This is a separate work area. We'll start cutting that portal in the next couple of months. And again, another work area as we're still mining in Kavanagh as well. New work areas, new production fronts, increasing that production profile. So as you can see, really starting to get on top of the mine here and open it up, and we're going to see the production continue to rise into the future as we do so. We've drilled around 43 kilometres from the underground drilling platforms over the last 10 months since we got started. The results of this have been really encouraging, including this hole here. This is 36 metres, 3.35% copper. So it's one of the earliest stopes that we'll be mining out over the next couple of months. What does this hole mean in the context? It means there's a lot of copper underground, but from an investor point of view, now that we're into production, the real questions people want to be understanding is how is the geological model reconciling now that we've seen a few months' worth of production? Well, I'm glad you asked, because it is reconciling really quite well. We're seeing a material positive reconciliation to the geological model for what we pull out of the mill. So there's basically more metal in the ground than what we have modelled. Pretty early to tell where this is going to continue, but if that does mean that we do have some conservative estimation parameters in our underlying geological model, and that continues forward into the future, it obviously would have a material positive impact on project economics. Mill has been commissioned, so we did that commissioning works in January, brought back actually quite an experienced team. They were able to take it from care and maintenance through to first copper with only 3 weeks worth of refurbishment work, so really quite exceptional result. We've seen sort of minimal teething issues that you might expect with the commissioning of a processing facility. And basically then we got straight into copper production in February. We started off relatively modest campaign, about 30,000 tonnes. That's now pulled up to 80 and will continue to grow towards about 120 as our steady state. But all the metrics are heading in the right direction. Feed grade's gone from about 0.88 up to around 1%, recovery from about 80% to 90%, and all this has culminated into an increasing metal profile from about 240 metal tonnes. It's now tripled in those 3 months to about 720, and we're on target in May to knock that out of the park once again. So everything is on track, and we're well on our way to delivering to the mine plan. Spoke a little bit at the top around copper price and the impact that this has. Basically, mine started $12,500 per tonne. Only last week it hit about $15,000 in Aussie terms. So obviously that $3,000 just adds another $40-odd million per annum to our annual cash flows, which is not bad given we have an EV of about $150 million. But as I said, the real value opportunity here is what does this mean to our mine site? So we're quite fortunate in that we have an ore body that's got a high-grade core with a lower-grade halo. So we can quickly respond to increase in copper price just by widening the stopes out, taking some more incremental feed from the already established infrastructure, presenting it to the mill, which, as I said, is only 40% utilised, converting that into copper, into cash, into that higher price environment for very low incremental costs. And that's a material advantage that we do have because, look, everyone's got a grade tonnage curve, but I just wanted to illustrate currently, based on $12,500 per tonne as the mine was designed, we had the Kavanagh sort of main resource area there that had about 5.7 million tonnes, 1.1%. But if we were to actually reduce the cut-off grade down to about 0.4, we'd see that head grade drop off a little bit by about 25%, basically offsetting the increase in copper price. We'd see a material increase to the resource base there. So we'd go from about 5.7 to 9.3 million tonnes, so it's providing a lot more opportunity to increase the production profile. So as you can see, mine is well underway. Concurrent to all of this, so we are still continuing with the exploration to grow this mine life and to also focus on increasing the annual throughput to try and fill some of the latent capacity that we have in the process plant. Since 2019, we've drilled 139 holes. We've actually had 163 intercepts of what we'd regard as economic copper gold hits. There's only been a handful of holes that have basically been drilled and returned nothing. So over 100% strike rate is great going in anyone's language, but basically it's because it's a very, very continuous ore zone in the Z plane, so down dip, and so every time we're drilling, we're pretty much hitting the target. But importantly, every time we've run a drill program, we've seen a material increase to the mineral resource estimate. We've gone from sub 1 million tonnes in 2019 to just shy of 7 million tonnes today, and that does not include the last 25 kilometres of drilling that was done last year that's actively being put into an update to our resource model. So the fact that every time we drill, we hit something, every time we run a program, we see an increase to the resources is really quite exciting when we consider that we have 9 known lode systems that were either drilled or mined as part of the open pit operations, but our current mine plan only includes 2 of these, and all 9 are open at depth and along strike, so they provide enormous opportunities to grow the mine into the future. Over the past 12 months, we've been drilling a couple of these areas, so Nugent, which sits well outside of the current mine design, as well as North Kavanagh. These areas have been put into an update to the mineral resource estimate. They'll come out as maiden resources, and then we'll consider whether we can bring them into, future mine plans. Again, new work areas, increasing that production profile as we go forward, and also been drilling down depth below where we're currently mining at the moment. So just looking at a couple of these areas. First, the down dip extension. Last year, we drilled a hole basically down underneath the pit, about 100 metres away from any other intercept that we had. We hit 45 metres at 1.2% copper. Weren't exactly sure what that belonged to. After doing a bit of geochemistry, worked out it belonged to Spitfire Stope, which are what we thought was a relatively small area shown here in red, just to illustrate it, that was part of the initial mine plan, but not that important. But we've got now underground and actually fleshed this out, and we're seeing everything continue between the red down to the drilling and then beyond that at depth. This is turning into quite an important lode system, and it's just another great example that the more we drill, the more we hit and the more resources we convert. Similarly, Emily Star, what we saw here was a pit that was mined 2015. It was open at depth. We knew it continued below, but we didn't have a lot of drilling below. We dropped a handful of holes down here, hit a couple of runs here, 70 metres, about 0.9% copper, deepest hole around 35 metres, 1.3% copper. So excellent thing to follow up on, and that's exactly what we are underway at the moment doing. But the one that I'm really quite excited about is Kanman 2 Deeps. We're actively drilling this at the moment. It's a large geophysical target. It looks like it's basically the continuation of the main mineral system that's just been offset down fault, and we are actively drilling into that area as we speak with the huge opportunity sitting there is about a 50 to 80 million tonne exploration target that we're looking forward to hopefully converting into future extension of the mine life. So I guess in summary, pretty simple story. We've gone from explorer through to producer in 7 months. We've delivered on every milestone that we set out to achieve along the way. We're now feeding copper into a high price environment that's not only just improving the project economics, but it's also lending itself to an opportunity to reframe what the underlying mine plan looks like, to actually try and use some of the latent capacity we have in the process plant to push more copper into that high price environment. And we've got a suite of exploration opportunities all within the shadow of the headframe of the existing processing facility that we're actively drilling to develop. So if you'd like to learn more, come and find us at the booth. I'd love to talk to you more about it. Thank you.
Thank you, Chrissy, and thank you everybody for attending today, and thank you for the RIU for allowing me to come and talk to you about Matador. So Matador Mining, we're not a mining company, we're an exploration company. We're exploring to make world-class discoveries on the island of Newfoundland in Canada. If you're not aware of where Newfoundland is, it occupies the easternmost part of Canada. It's an island. Right way over on the east coast, we have the capital city of St John's of about 200,000 people, and a 10-hour drive along the Trans-Canadian Highway takes us to Port aux Basques, where we have our exploration office. That's where we operate all our exploration projects from. And we have two major projects, Cape Ray, which is 120 kilometres of strike of tenements along the Cape Ray shear zone, and Hermitage, sitting on the Hermitage flexure, and then a brand new smaller project at Blue Cove. It's a copper project, which I'll talk about at the end of the talk. Our strategy is to use the best of Australian and Canadian exploration methods to make world-class discoveries. We have two district-scale projects, and on those projects at Cape Ray, we have a number of areas which we've broken it down into, which we believe are highly prospective for gold exploration. On that Cape Ray, we already have an existing 600,000 ounce resource, and we're looking to make much larger discoveries along there. We're well funded. We've got $8.6 million in the bank at the moment. We're backed by a number of very high quality institutional shareholders. 50% of the register is held in the top 10. Our exploration program has already kicked off for the year, so we're operating on a calendar year, and we're restricted to some extent by the seasons. So obviously, being in Canada, we have a northern winter season, which is covered by snow, and then we have a summer season, which is when we do most of our diamond drilling. At the start of this year, in January, we kicked off for the first time RC drilling on our project. In fact, it was the first time we've seen an RC drill rig on Newfoundland in 20 years. We've completed a 157-hole program, which I'll talk to you about in a moment. In the next few weeks, we're about to start our diamond drilling program for the season. That's the summer season. We'll do about 5,000 to 7,000 metres, first targeting new discoveries around the resource area where we have 500,000, 600,000 ounces already. And then we'll move the diamond rig to areas at our Malachite project, which I'll talk about, which is where we've done our RC drilling. In addition to that, we're going to be doing some major geophysical programs. We're going to do detailed air magnetics over this Bunker Hill. It's about 30 kilometres of strike, 50-metre line space magnetics. The same over Hermitage, down through here to give us the high quality magnetic information we need to upgrade and update our structural interpretations. In addition to that, we've got our Canadian prospectors out working on the ground, looking at areas that we haven't been to yet, mapping, prospecting, sampling, and identifying areas that we can go to next of high-grade anomalism, which has been very successful over the last 2 years. First project we'll look at is malachite, sitting right here in the middle of the tenement. You can see a big bend. This is the Cape Ray shear zone. And bends like this, and bends like this, and splays like that, they're the sort of targets that areas that you normally want to go to look for gold deposition. You'll note the landscape here, flat, boggy, lots of ponds, very difficult to get around in the summer period, but very good to get around in the winter period. What we just kicked off for the first time, we need to get through that cover sequence. Everything there is covered by till. We can't see much outcrop. We need to understand what is the geology underneath all of this cover. So to do that, we've trialled for the first time in Newfoundland an RC drilling rig, 20 years since we've seen one of these on the island, which is quite amazing. Reconnaissance drilling over a big, large area, so about 5 kilometres of area over a high-quality structural target that we identified over the last couple of years, which is also covered by a high-grade till anomalism, which we've completed with surface geochemistry, and drilling through the cover, short holes through the cover into the bedrock. We get a sample in the bedrock, and we assay that for gold and other pathfinders, and we're looking for the footprints of large deposits in areas that we know have very good structural signature and very good geochemical signature at surface. This proved to be extremely successful. In 15 days of drilling, we completed 157 holes. That was compared to the previous techniques that we were using to try and get through the cover. We were getting 1 to 2 holes a day using sort of more handheld techniques. So we were able to get the drill. You can see once everything's covered with snow, the ponds are covered with snow, we can get the drills around very effectively and prove to be very, very productive. So we think that this is something that we can use ongoing in the winter seasons to do our reconnaissance work very, very effectively. The results of this have been so far outstanding. We've only got about 40% of the results back so far, but already this is the extent of the program that we did. This is the main Cape Ray shear zone. This is magnetics underneath this. When you see bold coloured magnetics, that's rocks that are very high magnetics, lots of magnetite. The blue is areas where there's not much magnetite. Often when a structure goes through a rock, it destroys the magnetite, so you don't get low magnetics. So what we're interpreting through here before we even got there was structures splaying off through here at the bend, a major bend on a major shear, which is a great location for gold deposits. We had gold anomalism in till, so we've come across, these are broad lines, 800 metres to 400 metres apart, 50 metres on line, drilling to bedrock, looking just for first pass anomalism. We've only got the results from these so far, but first pass we've hit 0.5 gram gold, 2% copper in here right on that structure. That's 2.5 kilometres long. And we've got pathfinder anomalism up through here. We're waiting on the rest of these results. These are the sort of chips that we're getting back. So this is chalcopyrite quartz veining in an intrusive rock. So the plan here is to get the rest of these results back. Then in the summer period approaching, we'll have a diamond drill rig available. We helicopter that in and we'll do diamond drill holes through here looking for the extensions to mineralisation at depth, looking for large-scale gold deposits. So that's the type of work that we'll do through the rest of this belt. Moving down to Hermitage, which is off the main Cape Ray shear zone, is our second major project that we're working on. While we're doing all of this, we're going to be doing a little bit of diamond drilling around our resources which sit in through here as well. But this is Hermitage. It's very remote. There's no roads in here. The only access is by helicopter or seaplane onto lakes. That's how we get in there with our team. Boggy, flat. It'll be great access here in the winter with snow cover and an RC rig. But in the summer, all we've been doing over the last couple of years is dropping our geologists in. They spend time walking through all of this, accessing the outcrop that they can identify, sampling that and looking for signs of gold mineralisation. The reason we're here This is a map of Newfoundland, and the colours are antimony sampling from lake sediment sampling completed by the government. What the government does, they come in and on a 4-kilometre grid across the entire province, they've sampled lakes, they get samples out of the lakes of sediments, and they assay those for all sorts of different elements, gold and arsenic and copper, a whole lot of different things. And what we identified here in that lake sediment sampling at the highest and largest arsenic and antimony anomaly on the island is sitting right here over this package of rocks at Hermitage. That package of rocks is very, very prospective. It happens to be exactly the same age and exactly the same geology as the Bendigo terrain geology that we see in Victoria that hosts the Bendigo deposits and the Fosterville deposits and some of the other deposits that we just heard about that Flynn Mining just spoke about as well. Along that structure, this is the Cape Ray shear where we've got our main deposits. Along the structure here, the Hermitage flexure strikes around through here up to Newfound Gold's Queensway project. They've completed 500,000 metres of drilling on that project. They've got a high-grade gold project working on resources at the moment. That's in exactly the same package of rocks that we have. But this is highly anomalous in terms of its orientation on the island. All of the geology on the island is striking northeast. This one striking to the northwest is an ideal location for dilation, which is what you need to form gold deposits. So we picked this project up a couple of years ago. Not an ounce of drilling has ever been done there. And we spent the last 2 years basically just prospecting and walking and mapping that over that boggy terrain. And this is 27 kilometres long, big folded sequence with a big structure along the northern limb of the fold. And mapping across those just through creek beds and whatnot, we've identified gold mineralisation in outcrop. So this is 7 grams, 1 gram, 2 grams, 3 grams, 1 gram, 1 gram, 2 grams. These are outcropping gold samples, gold veins, spread over, that's about 7 kilometres of strike there. This is about 20 kilometres from there to there, in an area that no one's ever drilled before. So our plan is to go back in here for this summer, map it again, map it in more detail, and hopefully identify areas and try and get in there with an RC rig this year in the winter and drill along this looking for indications of larger deposits that we can go and do diamond drilling for next summer. This is the style of work that we're doing. The last project I want to talk about, Blue Cove, is just something that we picked up very recently, very opportunistic. This is a picture of, there's a guy standing there, 2 metres high. This is a cliff face of about 30 metres height. This is all copper staining in outcrop. So we had some prospectors came to us. We've got really good relationships with prospectors on the island. Came to us and offered the project to us. Actually, sorry, I'll just go back. This sits way over here. This is a 2-hour drive from St John's. So it offers us a really good project to operate from St John's. 25 kilometre strike. Never been drilled. There's never been a drill anywhere near this. In a package of rocks which is completely different to what we see at Hermitage and at Cape Ray. It's a bit hard to see the numbers here, but these are historic prospecting samples from outcrop, starting 2.6% copper, 4% copper, 5% copper, 33 grams silver. Over 20 kilometres of strike, we've got dozens of samples of copper, over 2%, up to 10%, silver up to 100 gram per tonne. We've got gold in lake sediment samples at 24 and 42 ppb, which are 2 of the highest grade pond samples on the island. So this is something that we'll be able to get into. We're not changing to become a copper company. This is just an opportunity. It cost us $10,000 to get the option. It's going to cost us 50 grand over the next 2 years to hold it. And we'll work on this as just another option of something to look for. Finally, I just want to mention we've got a resolution up at the AGM in the next few weeks to change the name of the company, just for people's reference. The vote for this will be on the 30th of May at the AGM, and it's to change the name to Omega Metals. So it's really just moving away. It represents a transition of the company away from our original Matador Capital origins to a new company focus on making great gold discovery and metal discoveries on the island of Newfoundland. So it's just something to look out for. The ticker of the company will change as well to AAM from MZZ. So any investors who own us, be aware of that one. So in summary, what have we got? We're operating in a world-class jurisdiction using the best of Canadian and Australian exploration techniques. We've made discoveries, we've got 600,000 ounces resource, we've got a fantastic landhold, we've got an extremely talented exploration team on the island doing a great job, and we're well funded and well resourced to do that work. So thank you very much.
Well, good morning, everyone. My name is Cristian Moreno, a little bit of a South American accent here. So I'm going to introduce you one of the best, or for me, the best junior exploration company in Western Australia. This is the capital structure. Let's go straight away. We have 180 million shares on issue. We have cash in the bank to $3.9 million. The enterprise value is $20.1 million, and the market cap is around $25 million. The shareholders is pretty much open. The major shareholder has less than 5% of the company. So this company is not held or held by an individual. This company belongs to shareholders, all right? So again, major shareholder has less than 5%. Can't mention his name, unfortunately. I have the board of directors. Every single company that stands here say that they have the best board of directors. We also have the best board of directors. But the most important thing for me is my technical team. So my technical team, we have 8 geologists. All of them, they have master degrees and PhDs. We do absolutely everything in-house. The only thing that we don't do is drilling and assay because we can't. But apart from that, every single thing is done in-house. This allows us to save money and save time. We never have a stop to drill in Torque Metals since we listed the company. And we want to keep drilling, and doing activities while I'm here, all right? So this is my technical team: exploration manager, senior resource geologist, junior geologist, and I'm pretty proud of having a team in a junior company like this. In order to keep a company very efficient and innovating a lot, we need to keep the exploration costs really high, right? In terms of exploration activities, we are investing 83% of our capital in exploration activities. In admin costs, it's just 17%. So this is not a holidays company. We work 12, 13, 14 hours per day during the weekends. And if you want to invest in a company, just go for a young management with a technical team because it's difficult and you need a lot of energy to run the show, right? So let's go to the project. We are located in Western Australia. We have roughly 800 square kilometers of land. We can drill during the year because we are in Western Australia. We don't need to wait for winter. We can drill every single time of the year. We finished 10,000 meters of drilling in the Paris Gold Project, but we are going to go there. So we have two discoveries, the Paris Gold Project and also the New Dawn Lithium Project. So before going to the projects, let's go to the structure of the tenements. We have 12 mining licenses, pre-native titles. These mining licenses allow you to go and drill straight away. We don't need to wait for permissions. We don't need to wait for authorizations. And if we want to go to production, we can do it as soon as possible, all right? So again, young management, small capital structure. We are located in the best country in the world for exploring. If you invest in this company, you are not risking in a social or political security. You are investing in Australia, and you should invest in Australia. So the Paris Gold Project. This is the Paris Gold Project. We are, as I mentioned before, we finished 10,000 meters of RC and diamond drilling. The results will arrive in a couple of weeks. And if you want to see visual gold, just go to the booth. and I'm waiting for the assay results. So I'm expecting very, very positive and strong news about the Paris Gold Project. As you can see, it's massive. Again, I have roughly 800 square kilometers of land in the best jurisdiction in the world with the best neighbors. My neighbor is Goldfields, Northern Star, Mineral Resources, Carora. There are plenty of merge and acquisitions going on. So guys, this is a company to have at least in your watchlist. So in terms of the project, before we go to the intersections, let's go to the gold recovery. We have 40% gold recovery, gravity gold, okay? But if we use cyanide, we go up to 99.1% and 94.2%. I think that is the other recovery. So we have a strong metallurgical characterization. This is a gold project, very strong gold project with very, very, very good recoveries. Here are the numbers, 96.79 in Paris, that is the gold recovery, and 99.7 in observation. And as I mentioned before, 40% gold recovery. The metallurgical study is public. You can go there. You can read the metallurgical report. And again, one of the best gold projects in the region. I mentioned before, we are located nearby gold fields. So they are producing a lot. They need additional grade. And we have high gold grade. But do we really have high gold grade? And the answer is yes, guys. 35 meters at 14 grams per ton. We have 14 meters at 7 grams per ton. We have 39 meters at 6 grams per ton. We have 27 meters at 8 grams per ton. We have 24 meters at 10 grams per ton. We have 27 at 10 grams per ton. 41 meters at almost 6 grams per ton. So is this high grade? The answer is yes, this is high grade. Where is located? Overseas? No, it's located in our country, in Australia. It's located south of Kalgoorlie with a lot of infrastructure and at least 6-7 processing plants nearby. If you want to look for a very, very good gold project, this is the project to look for. So what is coming for Paris? Again, 10,000 meters of RC and diamond drilling. If you are asking for news, those news, they are going to come in a couple of weeks. Mineral resource estimate. We are going to release the maiden mineral resource estimate. And it's going to be reasonable big, but I don't believe in MREs of 1 gram per ton. My project should be higher grade. So I'm expecting to have a very significant grade in the Paris Gold Project. I'm really looking forward to release the MRE, and I'm really looking forward to impress the market. Now we have the new Don Lithium project. So this is gold project, and this is also a lithium project. Why two commodities? Why different commodities? Because we have a regional consolidation. We are in Kalgoorlie. We own more or less 800 square kilometers of tenements in the same place, right? So if you are concerned about the capital expenditure or keeping the tenements in good standing, it's not a problem because we have combined reporting. And if you invest in one tenement, you can cover the cost of the other ones. Again, efficiency. So this is the new Don Lithium project. That operation that you see at the horizon, that is Bald Hill Lithium Mine, that is owned by Mineral Resources. So we are the neighbors, and we did a discovery. We hit around multiple intersections and 10 meters, 1%, 15 meters, 16 meters, 1% lithium spodumene, all right? We also did a maiden exploration target. It took us just 4 months to do this. And yeah, we worked super hard, we worked super fast, and in less than 4 months, we come up with an exploration target between 8 to 14 million ton lithium 1%. How the exploration target was determined? We did not consider that all the pegmatite was mineralized. We did this exploration target according to the JORC code, and we believe that all this stuff that you can see in blue, that is pegmatite. But the mineralization is focused in the area that we have drilled already. It doesn't mean that it doesn't have expansion. This is just in 40% of the tenements. So this has a significant amount of potential to expand the resource, all right? And these are the results that we have intersected so far. So as you can see, all the exploration target is focused in this area. Just here, we haven't explored the rest of the tenements. Again, in that area, between 8 to 14 million ton lithium 1%. And these are the intersections, 10 meters at 1.5, 10 meters 1.15, 12 meters 1, 8 meters 1, 7 meters 1. And everything is located here. And by the way, we are located next to a producer. So if you ask me, what are you going to do with this project? The answer is, I can't tell you, okay? So these are the intersections, the cross-sections. As you can see, continuity over there. We are doing the right thing. We are telling the market the truth. We are going to drill more the project, increase the resource. Everything is public. This is a transparent company, and we are working super hard to deliver news to the shareholders, all right? Again, more sections. And what is good about the new lithium project? We are located in mining licenses, pre-native titles. If we want to dig a hole tomorrow, we can do it. You don't need to wait. You don't need to wait for authorization. This is not exploration licenses, mining licenses, granted mining licenses. Second, we are surrounded by producers. We are 300 meters far away of mineral resources, Bald Hill lithium mine. And finally, we have the same geology of Bald Hill. That's it. So upcoming news, again, 10,000 meters of RC and diamond drilling coming in a couple of weeks. A maiden mineral resource estimate for the Paris Gold Project in less than a month. Exploration target for the Paris Gold Project, again, in less than month and a half. We have new drill campaign at New Dawn and also in Paris. And we have a maiden mineral resource estimate for the New Dawn Lithium Project. It's a really good company, guys. If you are looking for continuous new flows, this is the company to look after, all right? What else should I say? A surprise for the next week, all right? So at least include us in the watch list, because I'm going to announce something the next week. And yeah, it's very, very nice, all right? What else should I say? Again, if you want to invest in a company, look for a project where the project is located. Our project is located in the best country in the world for mining exploration, Australia. Look for management, young guys, because believe me, this job is not easy. You have to work 12 hours, 13 hours per day, even weekends. So look for spirit, look for passion, look for hard work, right? Look for a strong technical team. My technical team is amazing. And look for a company with a huge potential. We not only have potential in terms of the projects, but also in terms of corporate transactions. And I just want to leave it there, all right? Thank you very much for your time. This is Torque Metals, and hopefully you can join us in this journey. Thank you.
Thank you. Good afternoon, and thanks, Chrissy. Good to see you again. Well, I'm pleased and proud to be standing once again here in Sydney. And I remember 5 years ago just telling the story about geophysics that we're lighting like a Christmas tree for brine exploration in Argentina. Today we have the highest grade resource ever disclosed in Argentina, and we have a significant inventory that has 2 DFS, that each one of those DFS is showing a mine life of 40 years. So I will talk about Galan lithium, and I will talk, of course, about lithium and what it means. Even though it has lost flavor, the lithium story remains very strong, and we have made some significant achievements since last year. Just to recap from last year, what have we got? We got the construction permit. We started construction phase 1. We got the permit to commercialize our lithium, and importantly, that's an inflection point. We are the only company so far in Argentina that has got that commercialization, meaning that we can sell lithium chloride concentrate in Argentina and also overseas. Importantly, last week we were in China. We have strong discussions in a positive way with Chinese converters, and what I can say is that lithium is going very strong, and I'm very excited about that. But I'll tell you a bit more about Galan lithium. We started in 2019, just before COVID. That's Hombre Muerto West. That is Patapila, first drill hole. We went there, 720 meters to reach basement, and that was a massive thing for us because we find a significant amount of lithium with high grade. Now, please look at this picture. We are building, and we're going to be a next lithium producer in Argentina, producing lithium chloride concentrate on the first half of 2025. That is what we're building for installed capacity of 5,400 tons per annum. And then phase 2 will jump to 21,000 tons. So why Galan? We have strong fundamentals that makes our company a very strong and unique and differently. We have, as I mentioned, a world-class project with 8.6 million tons. So I mentioned a few times in the past that we were a baby elephant. We are part of the elephant family at the Hombre Muerto salt flat. We have the highest grade published in Argentina. We already constructing phase 1. We're more than 1/3 in. We're on time, we're on budget, and we've seen that we can reduce costs in our execution. We have a low operating cost, and I would like to stop here just for a second. Everybody has long phases today with the lithium price where it's standing, $15,500 a ton. When I started this company 7 years ago, the lithium price was $17,000 a ton, and everybody was so excited about companies like Galaxy Resources, Orocobre, and everybody was so much in love with lithium at that price. We're just at a short lower in price compared to that. But for Galan Lithium, and the expectation was running in Argentina. All these companies were having high valuations back in the day, 6-7 years ago, because brine producers have a low-end cost production. The rest of the lithium came from spodumene. And all what you hear today is Australia and spodumene. But spodumene is more expensive to make. And today's prices, people are worried whether you can make money or not. We're in brine. We can make money. We can have healthy margins. We can make more than $6,000 a ton margins if we were producing at the current price today. So, in other words, we have a bulletproof investment proposition that we are going to be producing at a low-end cost. Now, phase 2 is grabbing the attention of the market, and strongly when we went to China. There is a lot of spare capacity in China to convert lithium chloride concentrate, and that is going to translate in the near future in a contract. Is going to translate in a high payability for our concentrate because there is competition, there's a strong interest within Chinese, and also there's another country I cannot mention, but it's called installed capacity that they want that product too. So we still have also more lithium to be proven, and Candelas, we need to go back in there. And we've seen that the results from our own wells at Hombre Muerto West are given a higher grade. So it's, there's more lithium to come. And there's no company without a successful project without a strong team. We have a skeleton of SQM or OLX SQM executives and people that work and operate the lithium mines. So with that setting that I'm giving, I'm going to go through the presentations, but people makes the difference, and we're executing with a low risk. Where is all of this? You can see where Arcadium sits today. They gave their last results of operation with an EBITDA of 40% margin. So that's what I want to highlight. Brine, low-end cost production. You know the resource that we have, 8.6 million tons, is not a small resource, and we have a high grade in our resource, the highest in Argentina. And importantly, low impurities, because low impurities translate to low operating cost. The inflection point for Galan, in this picture, we signed an agreement to commercialize our concentrate. So now the world is our oyster, and we have competition. So bear with us, bear with Galan. We're going to come up with a contract with a higher payability, and that will translate also in more funding. That will also translate in that we can accelerate our project. Lithium, the lithium story is not going away. Even at the current prices, lithium brine producers will make money. And we can place this overseas, and we can accelerate then our project because there is a strong demand from China. 50% of the cars that are going to be sold this year in China, they're all electric. We were in Shanghai last week, and it was definitely quiet how it is to walk in the Shanghai street with no noise, no road noise from the engines. You could take a phone call, and the whole thing is changing. The West is pushing the production of electric cars because they don't have the technology, they don't have the capability and the economy of scale and the know-how. It comes down to software, and Tesla has it in the West and no one else. Everything else is in China. So we have a product that we can place anywhere in the world with a high tension. So we mentioned not long ago an increase in our Hombre Muerto West resource. It's big, it's high grade, and now it's going to get bigger because we have a resource upside. Hombre Muerto West, as you were seeing in the pictures, we are all the 1/3 in. Everything's going well. The wells are producing the flows that we said. The grade is hanging there. So we have reduced the execution risk significantly. This will be our producing asset in 2025, in the first half of 2025. And I would like to think that in 12 months, we'll have our first shipment. So we do have an agreement with Glencore, and that runs in parallel with the discussions that we are having with the Chinese. So what I want to say is that one doesn't eliminate the other. Both can coexist, and both funding can coexist as well. Now, about the share market, this is something that no one is very happy about, and I feel myself, being one of the largest shareholders of the company, that it's not looking pretty. But we have means and ways, and I can see the light, that we're going to come with the funding, we're going to come with a solution, and in 12 months when we are in production, this will be reverted. And by the economics, once again, I can show you where Galan sits in the cost curve. We can reduce our cost. The reason why we can reduce our cost and move to the left on the curve is because all the assumptions and everything that we're doing is done with diesel. We change that to solar, and we move the energy costs to the left, and the operating costs will be reduced even further. So, and furthermore, because we use evaporation to convert our brine into concentrate, our CO2 emissions are one of the lowest. So lowest in operating costs and also lowest in the CO2 production. So this will count more into when we get into the US market and the European market. So where's the upside? We started with 5.4 thousand tons per year, 21,000 tons. We have a DFS. We already asked for the permit, and we should be getting the permit in the second half of this year. So phase 1 should be a continuation, phase 2 a continuation of phase 1. Phase 3 is another 20,000, and phase 4 is 20 more thousand. So it's a massive upside to where we can get with Galan. We dream big, but we need to crawl before we walk and walk before we run. So been doing this for 6.5 years. I've got a fantastic team, supporting board, and we're going to get there. Just give us time to prove what we can do. The main man in the picture that he was mentioned, Daniel Jimenez, ex-SQM, ex-Vice President of Commercial, very well known in Asia. He is a man that sold concentrate, carbonate, and hydroxide for a number of years. Probably is the person that has sold the most amount of lithium in the world to date. We have Claudia as well, that ex-SQM. Terry, that you see walking around, and thanks Terry for your support, and Richard is based in Perth and is a mining lawyer. Our team, importantly, I'd like to highlight that Juan Carlos Barrera, he was the ex-senior VP of operations of SQM. So we have a strong team with the right credentials. So to summarize now, and if you got further questions, you can go and see me at the booth. We have a strong team with a strong local presence. We have good relationship with the government. We sign contracts with the government that is backing us in our development into Catamarca, and we have a strong ex-SQM team to execute. We have the best project in Argentina with the highest grade, low impurities, translates low operating costs. We'll make fantastic margins, even at current prices where people have long faces, don't forget. And the cherry on the cake could be Greenbushes. So what have we done? Geophysics, and we calibrating our geophysics now so we can generate targets and go and drill it. So we want to get into Greenbushes as soon as we can with the next drilling campaign. So bear with us. One step at a time, we're going to get there, and we expect to have a hit. So if all goes well, we can have two of the best projects to the next biggest production assets in Argentina and also Australia. So with that, I'll leave my presentation, and thanks very much.
But JP raised a point talking about the lithium price cycle, and he brought us back to sort of 2016, 2017, when there was a lot of excitement in the industry about lithium. And my reference point really is spodumene concentrate, particularly when I talk about pricing. So, at that time, I think the record that anyone had sold concentrate for was about $1,100 a tonne US for a 6% concentrate. And again, there was mass excitement in the industry. Pilbara Minerals were coming online, Altura was coming online, we had Bald Hill, all this activity. Everyone thought these companies are going to absolutely print cash as they go forward. Now the sentiment is, well, the pricing's terrible, everything's bad, everything's sad. What is the current price for spodumene concentrate? It's $1,200 US a tonne. That's the spot price. So we're actually still in a fairly strong pricing environment for spodumene concentrate. It is all relative. Obviously, the concentrate price went all the way down to about $300 a tonne and has since gone back up to $8,000 a tonne. And now, as I said, we're at about $1,200. So JP asked the question, does our project make money? And that's the question I'd like you to ask. When you're looking at a lithium project or any project, you're looking at the fundamentals of, will the project make money? Is this going to develop into a mine, and will that mine make positive cash flow? So I'm not going to give you the specific answer in this presentation, but if you'd like to talk through it, we'll be at booth 24 for the rest of the afternoon and tomorrow, and I can dive into the detail of some of the economics around our project. So from a strategic highlights point of view, a really simple message that we use quite a lot. So the right place, the right project and the right pathway. There's some dual meanings on most of those things. So in terms of the place, as mentioned, we're in Canada, northwest Ontario. The interesting thing obviously about Canada and the US, there is massive investment and appetite to build out localised supply chains, not just in lithium but in all critical minerals, and really build up the supply chain to support the automotive industry, which is the heartbeat of Michigan, and an area very close to where our project is. The right project, we're resource backed, so we're not an early stage explorer looking for something. We defined a maiden resource in May last year, 8 million tonnes. That was off 11 months of drilling. We've continued drilling since then, so we have more information and more drilling results to go into a resource update. We also see huge exploration and growth potential in our project ourselves. We're not looking at other projects, trying to bring everything else in. We believe we've got significant organic growth potential where we are. The other really interesting thing, and I think if you caught Ron Mitchell's presentation earlier, metallurgical test work. So the metallurgical properties of your ore body are what they are. The good thing for us is that Mavis Lake ore is performing exceptionally well in terms of making concentrate from conventional methods, but also the success we've had recently with some ore sorting and novel technology application for the project. And the right pathway. Pathway being, not only do we have a direct pathway to market in terms of the utilities and infrastructure that's immediately adjacent to our project, but the right pathway of how do we develop a project. I'll get to a little bit more detail on that soon, but most of the team have extensive hard rock experience. We've all worked together before, and we've delivered hard rock projects from construction through commissioning and into operations. So corporate snapshot, I won't dwell on the share price or those sorts of things. I think every lithium company's spoken on it so far. I would say the interesting thing now though is where does it go? And pricing, the pricing environment and pricing sentiment really does dictate the sentiment around all the lithium companies. So I'll get to it in a second, but the question is the pricing bottom behind us? I think the answer is yes. From the board of directors, I'm really well supported with a great board. And if you know any of the people up there and read the bios, I suppose it's good to note that we've got ex-Altura, ex-Pilbara Minerals and ex-Galaxy people all working together. Nigel Broomham and I used to throw rocks at each other on the other side of the fence when I was at Altura and he was Pilbara Minerals. But now it's a very harmonious and collegiate working environment. And we're able to draw on the strengths of both of those projects and the understanding of bringing both those projects online. The management team, again, principally ex-Altura. We've got a young exploration manager in Canada. He's doing a fantastic job. We're very fortunate with the work that we've done to date that we've had the same drilling contractors and the same geologist technical team supervising our project essentially since day one. So great continuity of input from our contractors and support staff. So market dynamics. I think the interesting thing here is we've obviously seen significant growth in EV sales. I think it's something along 360% from 2020 to 2024. Canada and the US are highlighted there as an automotive segment that outperformed in 2023. It was the strongest growth for EV sales, about 68% growth from 2022 to 2023. And obviously the forecasts continue to grow and grow and grow. Something the industry has always done very poorly is forecast demand. The lithium industry generally always is underdone on its demand forecasts. We always overemphasise supply, which doesn't typically come online in time, and we always underestimate where the demand's coming. So the thematic for EVs, the industry long-term fundamentals have not changed. The spodumene price, as I said, I'll focus specifically on spodumene. We saw a very steady decline down to about $300 a tonne in the middle of 2020, and then a rip rate up to about $8,500 a tonne. It's come off. Interestingly, I suppose the bottom that we've seen in February this year was at about $800 a tonne. So we've had a new bottom that's corrected significantly from $300 a tonne in 3 years. Will the price go back up to $8,000? Maybe not, maybe, no one knows. I think the main thing here, though, as we see, is a clear indication that the bottom is behind us. Personally, I would expect that the next run in lithium pricing is going to happen in the next 6 to 18 months. This is based on the fact of quite a lot of contacts and networks in China. We look at supply chain and inventory across the supply chain. Everyone is drawing down supply. All stocks are being consumed. We get to a point where the inventory is completely spent and the buying activity has to increase. And there hasn't been a sufficient increase of supply to come into the market to readily adapt to that. So our strategy for value creation, this was essentially, when I looked at the company, when I came in about 2 years ago, how do we create real value in a junior lithium company? So grow to full potential. We have a resource and we see the potential, as I mentioned, year on year to continue to grow that resource through positive drilling results. I'll talk more to what we've got and what we've got ahead of us shortly, but that's our plan. We want to continue to grow the resource and get it to the large possible scale we can in order to justify future operation. Advancing towards production, what a lot of companies will do will just focus on drilling and the resource. We always envisage bringing this into production. So we started really early, took a little bit of risk and committed resources and time and effort into our permitting works and our technical project development work. So again, metallurgical test work, really understanding how the flow sheet's going to come together. We've been doing baseline environmental studies as far back to October 22 and building up the data and the knowledge we need to permit the operation and bring this project into production. And then strategic partners. We could probably do it by ourselves, but it's going to be a lot easier if we can work together with bigger players. One of the things that we're very clear that we're not doing is we're not talking about building a chemical refinery. One of the things that's very clear that North America needs is lithium chemical supply. So our remit and our focus is mine and produce concentrate. We're very interested and have started having conversations with those companies that are looking to build chemical capacity. Can we partner with them, feed into their supply chain, that produces the chemicals into the market? Those sort of strategic partnerships are the things that we're working towards at the moment. So Mavis Lake project itself, where are we? If you're not familiar with Ontario, as I wasn't 2 years ago, it's in Canada. Right on the Great Lakes is a city called Thunder Bay. It's about 100,000 people. It's the second largest city in Ontario. That's where our satellite office is. You get to Thunder Bay, it's a 3-hour drive, turn right and you're literally at Mavis Lake. The town of Dryden is 14 kilometres away from the project. I liken it to Kalgoorlie, so it's about 10,000 people. It is our base of operations at the moment. It allows us to be an incredibly low-cost explorer, so no remote logistics, no remote camps. We don't have to helicopter in our drill rigs. It's a very quick mobilisation from Winnipeg down to Mavis Lake and the drill rigs are up and running. Again, it allows us to invest all of our working capital into the things that add value. The drillers, geologists, assays, that's the bulk of our expenditure when we're drilling. All the household names in the right-hand corner, as you can see, they have all invested and plan to invest and made commitments to invest billions of dollars into building out cathode facilities, battery facilities, and also EV production lines, either in southern Ontario or in the Michigan-Detroit area. When I put this slide together, we were tracking about $45 billion worth of investment. Honda just came out last week with another $15 billion investment. So we're now at 60 billion US invested and plan to build out supply chain and EV production facilities about 1,000 kilometres away from our project. The interesting thing, and I will talk to this quite a lot, is around the utilities and infrastructure to deliver to that part of the world. So road, rail and port access at the moment is immediately available to us to deliver material down into Detroit. So this is a particularly busy slide. Don't read it. It's on the website. What we're trying to show here is we've been pretty busy. We only acquired Mavis Lake project in January 22 and really got to work straight away. I think it was April the first drill rig started spinning, and we basically drilled for the first 12 months straight. We didn't stop. In parallel with that, we've extended the property. We acquired an adjacent property towards the end of 22, and we've really been treating that as sort of grassroots exploration, trying to build up a really good understanding of the prospectivity and the opportunity for further resource growth. As I mentioned, we commenced with all our technical studies, a very heavy focus on metallurgy. We're also going through scoping study at the moment. We're just about to start running through the mining chapter, the mining component of the operation being such a critical part of your C1 cost and an area that we really want to understand in detail. It is only scoping level, but we want to make sure it's probably going to a level of detail beyond what we need because it is so important. We want to make sure that the economics really stack up. And obviously permitting First Nations is a huge thing everywhere, but particularly in Canada. The First Nations communities are incredibly well organised, they're well funded, and you can't pay lip service to them. Our approach has been to engage early and engage transparently and meaningfully. So we've had really good informal relationships with the First Nations communities. We formalised one of those with the lead First Nation whose reservation is closest to the project in the middle of last year, signing an agreement in principle. What's an agreement in principle? It was an agreement to set out the framework for how we would continue to work together, cooperate and ultimately achieve informed consent for a future operation. We've been very transparent and very clear about the fact that we want to build a mine here, but we want to do it the right way. We want to make sure that everyone gets to benefit from it and also that it's done in the most sustainable way possible. So the maiden resource, again, came out about a year ago, 8 million tonnes at 1.07% lithium oxide. We've drilled another 16,000 metres since then. We have all the assay data for that. That is feeding into an updated resource model at the moment. Interesting to note, I suppose, the drilling results in that 16,000 metres, we had some phenomenal intercepts, absolutely world class. 30, 50, 70 metres, all high grade. We've drilled about 44,000 metres in this little 1.1k strike area at the moment, completely saturated it. So we do expect as part of a resource upgrade that a significant portion of the resource will go into the indicated category. We're very confident. Our modelling shows continuity of mineralisation from surface extending over 1.1 k's. We see this as a very mineable project. We've used the term recently in some of our other announcements talking about the northern prospects, about district scale. The next slide will sort of show what we mean about district scale, but again, this is across the entire project area. I mentioned right at the start, we see a lot of potential from organic growth, from continued successful drilling. We don't need to go and chase other projects or try and bring anything else into it. We see so much potential to really get to the point of having a resource mass that really does justify a future operation. The northern prospects, we've got an 8-kilometre trend, bookended by two very prominent mineralised and spodumene outcrops. We've done a rock chip sampling, channel sampling, infilled with soils and some aeromag, and identified more prospects and more opportunities to go and test this area. We've got field crews out right now and they're following up some of this geophysical work and also starting to get positions for future drill pads. We're very excited to test this area. So again, that district scale, you can see those trends in relation to the Mavis Lake area, which is the red little claims in the grey box. That's where all the drilling's been done to date. And then we see about 12 k's away, the beginning of this 8-kilometre trend. Again, it's all connected by forestry roads. We can access everything very easily. We'd look at a single processing site and possibly one or two mine pit operations or underground operations that would then feed into the one processing hub. So infrastructure, it's absolutely key. Everyone talks about being close to infrastructure, so we thought, well, we think we're really close, but we'll put some numbers around that. The property is surrounded by hydro transmission lines. There is a clear and well laid out path to actually hook into those transmission lines. The road that we have access to is actually the Trans-Canada Highway, so it's salted and ploughed all year round. It's open all weather. Dryden itself, as I mentioned, a fantastic base of operations for us. We lean on it extensively at the moment, and it will be definitely lean itself to a residential operation in the future. I'm being wrapped up. Flow sheet development, MET test work, we just came out with some great results in ore sorting. I did get some feedback that people might not have understood what we did with the ore sorting test work. If you want to know more, Brady, our metallurgist, is here. He's run that program. Needless to say, we're able to separate waste material from mineralised pegmatite and produce a pre-concentrate. We see real benefits for that in terms of optimising the flow sheet and potentially lowering the capex and then the opex of the operation by only concentrating mineralised pegmatite. I'm going to finish up there. We're going to be very busy up until now. We're going to be very busy going forward. So thank you very much.